All right. Hey traders, this is Jack and welcome to your Thursday update. In front of you is a chart of Sunday overnight futures, including Friday from last week, but Sunday overnight futures that gets us started this week for Monday inside the green rectangle. And this video is about keeping the same conviction, strong convictions loosely held in this market, but still kind of on pace for continuing to stay above 39.50, which is a really interesting point in this market for this year so far. And we've had a few little moments in time where we printed some pretty irrational ticks, Powell post FOMC on Wednesday, and then you had the Thursday morning overnight futures going pretty berserk as well, below 39.60 and bouncing off of 39.50 for the kind of the final day, the final hours of the day here. So we kind of have this weird situation, but what this video is about is keeping sight of the big picture. Above 39.50, still reason to be bullish. There's some interesting workspaces that I'm going to go through in this particular video to show you why I remain bullish and why this also makes sense to kind of slow down, consolidate, and look forward to more of a bullish move for next week, which is the last week of March, and if we continue to have a daily squeeze on the S&Ps next week, we also will have a continuation of a weekly, a 4-day, a 3-day, so it's all coming into this one inflection point. And I tend to be bullish. I'm looking for another bear market rally back into the January highs. And that gets this bigger picture started for going back into the August highs of 2022 at 4,300 plus. There is a chance that that could happen. It could happen swiftly. My favorite quote of the week is, this market is filled with surprises. Destroy shorts, gets longs excited. Destroy longs, get shorts excited. Rinse and repeat. That's a direct quote from JC this week, and it's totally true. That's the kind of market we're in. And so what I'm trying to do is keep focus of the big picture, which is still remaining bullish, but man, it is trial tested every day within this daily squeeze. Your first target to the upside should be a natural 4,100. There's a fire line there. The dollar is also doing something very interesting, which is coming out of a daily squeeze right now with downwards momentum. So I know that the dollar ended up 0.25%. It was also starting out the morning a little bit more than being down 0.25%. But even though that's still the case, we can still come up with a bullish kind of perspective for next week, because what is happening? Well, the dollar is actually trying to fire to the downside and come back down into my target, which is 101.5. There's this fire line here at 101.38. But the good news is this might even lift off this glass ceiling that we have in the S&Ps at 39.90, 4,000, and 4,025. So if we could break on through to 40.40 or even 40.60 and have a little bit of a Friday melt up, that gets the ball rolling for next week, which I think is going to be kind of an attempt, at least an attempt to break on to 4,100 and go higher. And hopefully we can get a little bit of a short squeeze and get that weekly squeeze on the S&P to start showing some signs of life. So, in this video, I'm not going to be too heavy on moving averages. They're all coming into one inflection point. You've got the 50, the 21, the 34, just they're every one of them on my charts is no more than about 5 or 10 points away. And, if you look at a daily 200, which is this dark blue line right here, we're bouncing off the daily 200. It's not perfect. It's not pretty, but we're above it, and we're above and holding the daily 100, which is this aqua line right here. So far in the video, I've talked about the dollar possibly continuing to go lower. That would help, everything in stocks. Semiconductors have kind of led the way. Big tech has led the way. I'm a little worried about that because if we get a rotation out of those, we might have to extend our bullish outtake on this market another week or two. So it all comes down to kind of where we close tomorrow for Friday. If you're listening to this video and it is Friday, we're hoping that 39.50 holds. But even if it doesn't, I have to really ask myself it's more like just critical thinking. It's like, well, do we really give up on the bullish bias if we trade below 39.50 for Friday? And the answer is no. I mean, as long as we're around 39.40 and we don't completely, fall apart in overnight futures tonight, Thursday through Friday, then I think we're still in good standing for Monday. In fact, what I would look for on Monday is if we are at 39.50, I'd look for a retesting of 3900 or 3925 to kind of reset the entire situation, and that might be your best long entry, and it might have to be first thing on Monday if we dip significantly, another 40-50 points. I tend to look at these FOMC meetings and everything that's going on with interest rate hikes as kind of liquidity events, and so you have a lot of trading going on in a very small short amount of time. Then all of a sudden it's just kind of over, right? So it's kind of like buy the rumor, sell the news, or it's, like here, buy the excitement. Okay, now that that's done, this market doesn't really have too much right now until, give it another 5 to 7 days. So that's kind of like the take here is if you're bullish, you have to give yourself more time. Of course, if you're scalping futures, eat your heart out. I mean, who doesn't want to do that, right? So that's been super fun to talk about in the futures room and do that a little bit with you in the sessions. The day trading room is also very interesting, kind of 10 o'clock. You kind of have the morning open. We talk about what's been going on, what's up and what's down, and why it's relevant to the big picture here. So kind of interesting. I mentioned a voodoo line earlier. If you have the voodoo lines, then there is a snow line here at 39.34, and that just might need to be retested. We can still do that with still holding on to this, daily squeeze that's on the S&Ps. And I tend to just kind of use the S&Ps as my one example. The NASDAQ's looking strong too. The Dow's looking really strong. It's just that you've already kind of have some squeezes fire on the NASDAQ. It doesn't mean it can, overcorrect or come back in. It's just, I think the S&Ps, there's a little bit more opportunity there. We might just have to wait a little bit longer for the move that we're waiting for. But that's what I wanted to address in this video. Typically whenever the news is bad and, there's doom and gloom everywhere, I tend to kind of look at this market and go, yeah, I'll try buying that. And there's a lot of bad stuff out there, the banks, defaulting, all that kind of stuff. War in Ukraine and Russia, that's just going to be an ongoing thing apparently this year. Just remember, one of the most important things that you have to realize or just remind yourself of is we spent the entire year last year in 2022 consolidating and continuing to just kind of fall. Everything in the big tech space, VC funds got dried up. We spent the good amount of 2022 consolidating here. And now we're not making new lows. We're actually kind of, fighting. So you're saying there's a chance, and that's definitely what I'm saying. It just might take a while to get this machine going here. But interesting chart on the S&P. You have a weekly squeeze and a daily. We'll see which way it fires. And then, of course, anything above 39.50 or around 39.50. We quoted the 39.30 level. That still is okay. My thing is if things aren't just completely falling apart and things are not ugly, it's kind of a window to say, okay, well, this market sure is trying, and if it's certainly been trying since the October low and retested the February low as well, and we're still bouncing, still pretty healthy above 39.50. So if that dollar chart from the daily time frame, if the dollar's going down, stocks are going up. And this is kind of a perfect environment. We're past monthly expiration. We're past FOMC. A lot of speculators in the market didn't probably get that super bearish move they were expecting. And that might have some repercussions later on next week or even tomorrow for a Friday melt up. Okie dokie. pretty straightforward stuff. Wanted to deliver that, all the data points as best as I can. So much more to look at. It never ends. Silver and gold are certainly very interesting, waiting for a pullback in both of those. We may not get it, but hopefully we do. And we discuss long GLD calls into 2024 all the time in the room, and there's just no reason to jump into gold right now. Let's let it correct, and let's let it break a bunch of bulls' hearts for a little bit, and see if we can't get back down to 1920, 1925, somewhere like that. Makes it a lot easier to manage and open a position instead of here at the highs around 2000. So good luck trading. It should be very interesting to see where we end up, and I will see you in the futures room tomorrow or the day trading room. Have a good afternoon, and we'll see you in the next one. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.